Willie, thanks for joining us for a review of Q2.
Happy to be here.
Thanks for being here. Let's talk a little bit about you and the differences you're seeing from when you came into the business to now. So you came in during the pandemic in 2020.
Yeah, hard to believe it's been that long.
Perfect timing.
Yeah.
Actually, it was perfect timing, in hindsight, right?
Yep.
A lot of years have passed since then. And you came in as a JA. Now you're a principal in the firm.
Yep. A lot more gray hair.
Well, for me,
Yeah.
not so sure about you. You're looking okay there.
Thank you. Yes.
What's changed in those 5 or 6 years since you got in? What are the biggest differences you're seeing?
Yeah, I know a lot's happened since then. And like you said, I did come in at, kind of really a big time of industrial real estate. I know a lot of our industrial brokers were, having the time of their lives with the deals they were making. And it seemed like really, if you slept on a deal for a couple of days, you might miss the opportunity. And I think that's really the stick. It was demand was outpacing, demand was outpacing the product that was out there. And if you, propose on an LOI, that LOI might be outdated in 2 or 3 days just because the market had that much activity. So that's certainly slowed down since then. And, I think it's somewhat stabilized in the sense that tenants have more time to review options and consider if it's, whether it's a renewal, test the market, go out and see if there's space out there that might fit their needs and what they're looking for. So that's probably been the biggest change since I first started is the market's slowed in a sense that it's more balanced and tenants have more time to evaluate the next steps for them.
Yeah. In research, we call that reversion back to the mean.
Yeah.
Right. We had this huge ramp up in activity and now we're back to normal activity, which is still really very strong.
Yeah, we had a good quarter this past quarter, so it's good to see.
Yeah. So on that note, development activity has ticked up a little bit.
Mm-hmm.
We're at about 12 million feet, maybe a little bit north of 12 million feet.
Yep.
In the Northwest, though, I think we don't have anything that's speculative under construction. I know you guys do a lot of work up there.
Yep.
What do you think is going to, sort of tip that iceberg over? Just, when we see someone kick off a new building up there, is it going to be interest rates? Is it going to be just finding the right piece of land? What are your thoughts on that?
Yeah, we're lucky to be a part of the last project that was just delivered at Core 5's 2-building project in Emerson. So we're excited that we had that opportunity to try to track down a tenant for that project. So super excited about it. I think right now there's in the last couple of years, there's been a ton of product that's just been sitting there, that was built in 21, 22, and the leasing activity has been slow. Now it's picked up in the last year and a half up there, so that's good to see. I think what developers are waiting on is for the rates to make sense for them to break ground on the project. And especially if they're in the acquisition mode and trying to tie up some land. Right now, it's really tough for those numbers to pencil based on the rates that we're seeing. Some of those owners are more long-term holders, so they've been willing to, be a little more aggressive on the rate to win the deal. And others who are more merchant-based, they can't afford to really come off that that initial ask. So it's been tough for them to make the deal work. So, it's tough. It's tough to say. I think you got to see more space being absorbed. And, I think with the quarter we just had, we've seen a lot of that take place, and we'll see that in the absorption numbers as the year goes on. So I think we're all trending in the right direction, but I think that's kind of the biggest point is rates have got to increase for those new builds, for new developers to start more projects up in the Northwest.
Yeah. And rates really haven't increased this year the way they have in years past. I mean, I think we're at the very least holding steady.
Yep.
And maybe incremental improvement, but certainly not the improvements we saw, 2, 3, 4 years ago.
Absolutely.
And on that note, vacancy ticked up a little bit this quarter. So we're at 8.9%, still a very healthy range.
Yep.
Nothing wrong with 8.9%. Glad to be there, I think, overall. But it is an uptick. Development activity, as we just talked about, is, rising a little bit. So we do need to absorb space to keep pace with the new level of development activity.
Yep.
As you're putting tours together and scouring the market, are you seeing a lot of the same old spaces always being available? Are some of them starting to come off, get leased? And are you seeing some of them, come off the market and new space come on with new development activity? What are you seeing overall?
Yeah. I would say certainly there's some of that new spec build that's still out there. And those are the deals that we're waiting to get absorbed. We need them to get absorbed. And then you are starting to see some second gen type spaces more in the infill area closer to Atlanta that are coming available. And that's, whether that's tenants trying to revise their footprint or their flight to quality. So we've seen that in some certain areas where, tenants are looking to maybe downsize, but move to a building that has a higher clear height to maximize their square footage. So whatever the story is. So really we've seen both the new spec builds that are still available and some new second gen spaces that are coming on the market.
So we had a lot of leasing activity, obviously COVID, post-COVID, 21, 22. And we predicted this year and into next there'd be a huge wave of renewal activity, right? A lot of tenants renewing, staying in place, probably, as a lot of tenants do. But are you seeing that, or are you seeing tenants more likely to move? Are they staying in place? Are you even seeing a wave of renewal activity?
It's interesting. So based on our database, we do track a lot of the expirations that, in the markets that we focus. And there are a ton of expirations the later half of this year into next year. So on paper, you would think you would see a lot of the renewals. And it's not to say that we're not seeing it, because we are. But we have seen some new deals starting to happen, and that's a good sign. We need those deals to come into the market, whether it's Northwest, I-20 West, whichever market it is. So I think shockingly, we probably anticipated more renewals at this point. I think it's coming for sure towards the later half of this year, but new absorption has been great to see with these new deals. So, I think that's a good positive shock at this point in the year. So,
Sure. So we talked about rents a little bit earlier. They're increasing, but not at a breakneck pace. Where are owners, and maybe it's specific to the owner and what their situation is, but where are owners giving up a little bit to tenants right now? Is it on rate? Is it on concessions? And generally, what are you seeing there?
Yeah, I think that question depends on the owner. One, I think like I said, some of the long-term holders are more willing to be a little more aggressive on the rate that they offer. I think across the board, we are certainly seeing more concessions as far as TI and free rent, especially if some of these owners have underwritten so much time to lease up the space. And if they can get a deal within that time that they have underwritten to lease the space, and they're more willing to offer that as free rent. So because that's what they've got in their underwriting. So a little bit case by case, ownership wise. Certainly some that want to really press the rate and maintain the rate and offer more free rent and get aggressive in that sense.
So if I'm a tenant looking for space right now, and I'm talking like market wide, is there an area of the market that you think is a good buy right now for tenants versus others? Is there an area where you see, and I don't want to call it landlord or owner weakness, but is there a place in the market where, tenants see advantage right now?
Yeah, well, I would first hire me as your tenant rep.
Sure,
give us a call.
Absolutely.
Billy Snowden, Willie Candler.
No question.
We'll get you the best deal out there. But, I think escalation, we started to see owners come off that a little bit. So I would really hammer a lower escalation where, we've been 4% for the last couple of years, and we've started to see a little bit of 3.75, or it doesn't have to be full. Sometimes we do quarter base, 3.5, 3.75, 4%. Why not 3.8? 3.9.
So owners are negotiating that a little bit more heavily than they were before.
There's more flexibility in that. So I would really push for that, because that makes difference. If you're signing 5+ year term. So, there's ways to get creative nowadays. I mean, at the end of the day, the owners want occupancy, right? Especially. Some of these new builds that have been sitting for a long time, they need the occupancy. So there's ways to get creative from a leverage of a negotiation standpoint or the tenant standpoint to really push to get the best deal possible for you.
Okay. All right. So let's end it here. One last question.
Yeah.
So 6 months from now, we're sitting in the same place, having this similar discussion.
Yep.
What do you think we're going to be talking about 6 months from now that we didn't mention today? Anything come to mind?
Braves win the World Series.
Okay. All right. That's fair.
Real estate related, I think Atlanta has been slow in the development side for the last couple of years, just with the, boom of development we saw during the COVID era. And we're starting to see that number tick up here this year. Some of the big spaces have been absorbed or coming off the board. So in some of the talks that we've had with developers we work with, they're starting to try to lay out some site plans that they can go back to the bulk market and fit 1 million feet plus on the site. So
larger buildings.
larger buildings, I think, are going to make a comeback here at the later half of this year. And I think we're at the numbers, 12 million feet right as of today for space under construction. I think you'll see, I want to say, let's call it 18 million feet at the end of the year under construction.
Okay.
So I think you'll start to see that square footage tick up as we tick into the fall and into the winter months here.
We'll write that number down on a piece of paper.
Call me out if I'm wrong, please.
Yeah, we'll revisit it.
Yeah, 18 million plus square feet of under construction. So
good deal.
Good to see.
Okay, excellent. Well, Willie, thanks again for being here and talking about Q2. And we look forward to the next time. And best of luck to you for the rest of the year.
That's it. Give us a call.